For more on how investors are positioning commodities, Sprott Asset Management CEO John Ciampaglia joins us now. John, great to see you with us. In terms of flows, what have you been seeing? Have they been just as strong?
Yeah, we've seen incredible investor interest, particularly at the end of last year, which is not a normal period of investor engagement, and we've seen continued momentum into 2026. The real winner so far, I would say, has been physical silver. There are a number of factors that are driving investors to physical silver. It's hard to believe that it took, from 2011 to late 2025 to breach the old high. And since we did that, silver has not looked back. It's almost doubled since breaking the old high. So it's had incredible momentum over the last few weeks.
At what point do you think demand destruction comes into the silver price picture?
Yeah, it's a good question. We've had some solar panel makers in China already say that with the price of silver at these lofty levels, they're going to start to substitute to copper. Not as efficient in terms of the use in a solar panel, but you will see some lower value, I think, products try to substitute. So that's normal. But I think what's really overwhelmingly driving the market is investor demand. We've seen a lot of investors around the world returning to silver. And one of the big buying groups is in India. And the reason for that is simply because as the price of gold is now knocking on $5,000 an ounce, investors in India cannot afford to buy gold. So they're substituting towards silver as an alternative. So we saw 85 million ounces of silver being imported into India just in the month of September and October. And we see continued investor demand, not only from buyers in India, but also ETFs. We've seen very strong inflows into the Sprott Physical Silver Trust over the last few months.
Hey, John, it's Tim. Look, I've been following you guys for a long time, and you've been out front on gold and silver, but also on uranium. And, my sense is that much in the way we're talking about demand from the investor side, I sense that there is institutional demand for PGMs. And first of all, it shows in the price of your stock. Your stock has been a rocket, and I think a lot of investors have figured out that you grow, your revenues grow, even though there are economies of scale. Let's put it that way. I guess I'm just trying to understand, to the extent that you're seeing a scramble in the institutional investment community to have more exposure, and whether that means owning PGMs as an institutional allocation with the only handful of people. That's a very small group that can actually do it in an institutional way, and also the business overall, which is that this is an asset class that, if you've been in emerging markets and other places for a long time, gold's been growing and growing. But precious metals, what I'm hearing from the biggest money managers in the world in terms of RIAs and whatnot, is that you start hearing about 10% allocation to PGMs, and plus of that means, I think institutionally, let alone retail, they're short, and I think there's more to go. Just comment any way you want, because I know you can't talk about strategic stuff, but I think it means we're still very early.
Yeah, I think we're incredibly early. I think you have to take a step back and think about how many of these markets were in, 10 or 12 year range bound, patterns, whether that was platinum or palladium or copper or uranium. A lot of these metals kind of zigged and zagged and didn't really do a whole lot while tech stocks were reaching all new highs. That period obviously led to very little capital investment, which is why we have shortages and scarcity of many of these metals today. So when capital starts to come back, it can have an immediate impact on the values of these metals. And secondarily, you're seeing governments around the world, including the United States, obviously identify the strategic importance of a lot of these metals for energy security and national security. And there's a big push right now to reshore not just mining in the United States, but also processing of these key minerals for defense technology, et cetera, back to home soil. So you're seeing the potential, introduction of government buying of metals and stockpiling of metals, kind of like, what we had in the Cold War, which is obviously far behind us now. But it seems to be another buying group in the form of governments getting involved in some of these metal markets, which are also pushing prices higher.
Hey, JC, in this new sort of world order we're in, the repatriation of gold by a lot of countries is a story. How does that impact you at all? Does it impact you, I guess, is a better question.
It doesn't impact us. I mean, we're able to buy gold pretty easily in large volumes, given the amount of production. But I think you're raising an interesting point. As governments become less trustworthy of each other, you've seen some say, I want to move my metal, out of the United States, for example. Remember, why was this metal moved in the first place? Well, after World War II and the beginning of the Cold War, governments in Europe were concerned about holding physical gold in their countries, so they diversified by holding it around the world. The last 5-6 years, governments are saying, we want to bring our metal home, and that's something that we've seen in a number of instances.
Mm-hmm.